Right, let's move next to Imperial. So this one also is associated strongly with a particular founder, in this case Bill Lynch. I think it was about 3 or 4 decades ago. He sadly passed on. It's involved principally in logistics. Car rental, a big part of it as well. It was called Imperial, now called Europe Car. You'll be familiar with that from the airports. It's got a tourism operation, busing, financial services as well. They're in insurance, Regent. And vehicle distribution is what we're talking about here today. This is interesting, not just retail. They've also got a couple of distribution relationships as we'll expand. It's big in South Africa and Africa generally, now bigger in West Africa. It's got operations in Australia. It's quite substantial in Europe too, where they've got a number of logistics operations operating in Germany and that kind of thing. It's under new management after Hubert Brody, who was after Bill Lynch. There is now Mark Lamberti at the helm, ex-Massmart Group CEO. The market cap of this one, 38.6 billion rand, dividend yield 4.5-ish, price to earnings ratio 11.4. So that's quite cheap. But anyway, going back to first principles, how do we feel about Imperial?
Yeah, we like Imperial, but again, you've got to get it at the right price. I mean, Imperial seems to be trading a range between sort of that 160 up to 200 level. At 205, we're looking at it. It probably does become a little bit overbought. At 170, you should be piling into it as well, just for that trade.
My mental recollection is that the car retail business, which includes those distributorships for Hyundai and Kia, which are pretty important, we must talk about those, is also only about a 13 billions turnover out of 100. So it's again a sort of modest but not unimportant part of the business.
Yeah, again, it's got that motor retail component, but again, it's the big logistics company. But before we talk about that, I think you mentioned obviously the yuan and the currency impact on this company. The currency impact is absolutely enormous. So
yes.
With the weekend rand, I mean, it's about a year ago. Imperial came out and said that their real break-even, where they need the currency, is about 10.50. We're obviously a lot weaker than that at the moment.
Talking about the won, which is the South Korean currency, because that's where the cars are coming from. The Kias and the Hyundais, which had a major impact on our local market.
100%.
They really sold well at the bottom end of the market in addition to the VW Polos. But the problem is currency going against them that just munches the margin, and
it makes it very difficult. And I think it's also making it very difficult for Mark Lamberti, which has just come in. He's now looking at where he can take the strategic direction of the business. And I mean, one of the big benefits for Imperial for us is that German exposure, because at the moment he's got to be looking at the huge exposure, South Africa, and saying, I need to sort of look a little bit more offshore. We need to just get the mix right, unless you've got a view that the rand is going to strengthen dramatically. And at the moment they can't work on that assumption. So we're looking at, with the trouble that's going on in the Eurozone at the moment, Germany, not a bad place to have your exposure, especially if you're looking for some offshore acquisitions that you can bolt on there.
And last year was a tough year for the business because they had the big motor industry strike, big NUMSA presence in their business. So you've got to think that with Mark Lamberti stepping on the gas a little bit, this is going to be a better year for them. Not really reflected in that share price yet, though, but range bound, as you said.
Like I said, you're trading the range there at the moment. But Mark Lamberti, again, like, he could add a very interesting dynamic. I mean, Imperial's always been, operationally very sound, but perhaps tending to a little bit more conservative on the acquisitions. Because if you look at Mark Lamberti's history, he doesn't mind paying up for things as long as he sees it as part of a bigger strategic decision. So I think he could take the company in interesting directions.
So you're leaning towards hot, even though
I think I can give it a hot at 170. I think it's trading 189 at the moment. A little bit pricey. I think it's looking a little bit fully valued at the moment.
Okay, so you're going not hot. I'm going to stick with hot just on account of a better year looking forward.